setup, right? The idea of any setup, any entry, the preparation work that we are doing ahead of time is so that we don't have to monitor the chart, to be glued to the charts on a regular basis, right? It's just we get glued in as little as possible. So really, that's my goal. That's why I tell you to use the 1 hour chart versus the 10, 15 minutes, 5 minute chart, right? Those are just too fast for the amount of time we have during the day. And even if the 1 hour chart becomes more challenging, you can go to the daily chart, and then your analysis is monthly, weekly, daily, right? Those are the three charts you look at, and you take action based on that if the hourly becomes more difficult. Because all you have to do is set alerts. You set alerts. Going back to 2 weeks ago Tuesday, when we talked about entry possibilities, right? There were two things that we talked about. If price breaks below this line, we enter to the downside, with the knowledge that somewhere in this gap close we have a reversal, right? Those were the plays that we discussed 2 weeks ago on Tuesday. And so as the day progresses, if you don't want to look at this chart, what you do is you come to this line and you set an alert. You set an I don't want to do it that way. You come here and you why am my alerts not showing here? Something. Oh, I because I'm in replay mode. Sorry, let me just get out of that replay mode for just a second. So you come to this line and you're setting an alert, right? You have your horizontal line. You set an alert at that horizontal line. It gives you this alert signal, right? You have that alert, and then you go about your day. When you get an alert, you can set it up so that you can get it in email and text, right? SMS. When you get that alert on Wednesday, when it says, "Hey, I just broke this," you go in. You have nothing else to do because you've already done your preparation. You've already studied the chart. The only thing you do is take action, take a trade. Take a trade, put a stop above here, and put your take profit somewhere in this zone, because we said this is the reversal, potential reversal area, right? This gap here was the potential reversal area. So then you take that trade and you walk away and you set another alert. So halfway of that gap or at the top of that gap, whichever one you feel comfortable, you set an alert. When that alert kicks in, you come and take action. At the stop side, you don't even need an alert. You set your stop, you walk away, you let the trade take shape, and if it stops you out, it stops you out. It's fine, right? You should not worry about it. So by setting alerts, you manage your time. You don't have to study the charts. That's why we do this Tuesdays. Let's look at setups, right? And our setups are based on the fundamental analysis, right? So we've done not fundamental, the technical analysis. Sorry, we've done all our analysis, and we said, hey, we have 38% retracement, 50% retracement, 61.8% retracement. That 50% retracement comes close to our gap. So we're going to say this is a good area where price could potentially reverse. We set an alert. We don't put a trade ahead of price telling us if that's the actual place where price reverses, right? We have to be sure that price comes down here and reverses. How do we know that? Do we get a hammer? Do we get an engulfing? Do we get railroad tracks? Or do we have a flag? That's it. These are the four conditions we look at. And here's the flag that formed throughout that Thursday. Right? We've taken a position to the downside. We went from 292 to 288, pretty decent move. We take our profits because we know this is a potential reversal area, and we don't see price pushing down. It's actually reversing, so we take our profit. And then we see this, the next couple of hours, we monitor it. We see this flag. We set an alert above this line. When that alert triggers, we take a trade. We take a trade, we put a stop right below this, and we target the next gap. We target the next supply zone. Whatever we have identified, that's what we target. Right? There was a gap here. You could have targeted that gap. You'd still be good. So I'm trying to tell you and show you how to minimize the amount of time you spend on the charts during your working hours. Right? The majority of the time is at night when you're studying what are my fib levels, what are my gaps, what happened in the market today, did it go in my favor, and so on. Therefore, you have enough time during the day to just pull the trigger because you only need a couple of minutes. There's no analysis at that moment. When you pull in the trigger on Wednesday when price broke this line, there is no analysis. Brokerage account, place the trade, place the stop, place an alert for take profit area, walk away. Just let the stop take care of itself. Let the profit area give you an alert. Even if you don't want to set an alert, you take that profit and you walk away. Right? But that alert is good for you because then it sets you up for the next entry. And at the next entry, now that both of these actions have happened, and there were two things that we talked about. Is when this happens, it's a reversal, but also if price goes up, pulls back, and then makes you another higher high, was a good entry. It did this, and this. It never gave us a higher high, right? It collapsed at a lower high. So that part is done. Now here at this gap, so we took care of this gap. What did I just do? So we took care of this gap. We took care of this demand zone because it actually went completely through it. So we took care of this demand zone. Excuse me. And then we took care of this gap up here. How we took care of that gap? We have an inverse hammer. This inverse hammer, we take it and then we continue to have lower highs. Right? We have a rally, we have sideways movement, and you can even take this trade again. Now, here was a bit tricky. Here is where we actually did touch the 50% retracement. So if you have your alert, right? You have green to green, remember green to green? So at every green level, you should have an alert if you're not able to watch the chart. If you're not going to come here every hour, you just set an alert. You set an alert at every level you set your alert. Right? At every level. And once you have your alert, price touches there, what happens here? This is almost like an engulfing, right? It's not quite because it has a big wick to the top and to the bottom, but this comes down to the 50%, gives you this big bar, and then the next bar is also an up bar. Again, an opportunity if you want it to the upside, but here I don't take it because we took it here and then we're seeing lower highs, so I'm not comfortable there. So this one I'm not comfortable, but if you take it, it's the right decision. It's the right decision because we came to 50%, we have a big bar up followed by consecutive bars up and a small retracement and up again. I'm still biased to the downside. We're making lower highs, right? We're making lower highs, and when you look at the futures right now, they're saying just, I don't know what to do, right? This plus 10 in Nasdaq is nothing, right? It's just saying I don't know what to do. So this is how I want you to think about the process. You study at night, you prepare your charts, and then based on that you set alerts, and the next day you take trades. Right? That's basically what I want you to do. So this alert, we don't need it anymore.
What expiration date do you usually use?
So it depends on what day I'm taking the trade. Like if I'm taking the trade on a Monday or a Tuesday, I might go that same week expiration. Spies, you have expiration almost daily, so you could uh, you could kind of play with that and say, hey, let me try a small position for same day expiration, next day expiration, right? You have an opportunity to play around because same day expiration prices are cheaper, right? Every day you have time value into it, so you can play around with what makes you feel comfortable. But ideally, what you have in your analysis, if you say when price comes down here reverses, how long do I think it will take for it to reach its next level, right? So if this gap here is this next level, so it took just 2 days, right? 2 full trading days. So if you have it expiring, on a Thursday, if you have it expiring on a Friday, you wouldn't be wrong because your analysis says, hey, usually I see a good move in a couple of days, right? So more than a week and a half, it starts to get expensive, like on options. I don't want you to do options yet, right? You're doing stocks, so you have no fear of expiration on paper trading. You're just pulling the trigger and letting the stops take care of the things, right? And so you can have your target one somewhere here, your target two at this next gap here, and you're trailing your stop. So this is what I'm trying to teach you. Don't spend too much time during your day. That's like for me, I can just do it on my phone because all I need is about a minute, maximum 2 minutes, right at the bottom of every hour. And then I have alerts that tells me, hey, there's some potential thing happening. Go take a look. And if I don't have time, don't take a look at it. That's fine. But at least I have minimized how much time I need during the day.
That makes sense.
So I want to look, before we look at next week's setup, I want to look at Apple. So Mani and I, when we went through this a couple of weeks ago, unfortunately we did not record that session. So you took a trade up here to the upside. I said that day my bias was to the downside, and you got stopped out, right? So I guess you were also right, because if your stop was wide enough, you would be in a very sweet trade, right? So it's, for me, it was about bias. We keep making lower highs, and I was not yet comfortable to take a trade. At the best case, I would have liked you to take the trade sooner, right? So at the best case, we have this gap. When we come to this gap, take the trade a little bit sooner. That's what I would have liked to see, instead of taking the trade somewhere up here. And then we formed a demand zone, and then we blew through that demand zone, and then we went up. But even up, when we went up, we still make lower highs. So the market is not yet done making lower highs.
Yeah, that was a nice surprise the next day. I actually intentionally kind of just wanted to let it run to see what happens.
Yeah.
And then the next day it reversed, so it was good.
And then you got stopped out, right?
Yeah.
Yeah. I think sometimes, like when I hear you about your stops are a little tight. I don't know where. So if this was your base, to me the stop was the 38.2, a little bit below that 38.2. So how much below you went? You can never be right, but I'm glad you took the trade. and hopefully you've journaled it.
Yeah.
And so that becomes a learning moment.
I'd actually, I had made a plan on SPY. Unfortunately, I wasn't able to execute it because I just it blew past me the next day. But
Yeah.
I had journaled a pretty good plan for SPY, and I had even took some screenshots and made some notes. Especially when it got to the four, just below the 408
So
level on
here,
SPY.
last week Monday.
Yeah, right there, because I saw that gap. It was before it closed that gap. And
Okay.
so I journaled it and I said, okay, if it goes through, closes that gap, and then comes to the downside, and then uses that, and then does another V, and then it does a mini V right there, just at the end of the another peak, I guess, a mini peak, right at the end of that gap zone, where it has like down, 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 and then you get that green bar, that mini green bar. And if it does that, I told myself I would take it. And then unfortunately, I didn't actually execute on it, but that was, I had journaled to take that trade.
So I like a lot of the things. I like 99% of the things about your trade. Only thing I would have preferred is you have two hammers. You have uh, like almost an engulfing here. So why do you want to wait here? Why not take the trade here?
It's true.
Because your stop is shorter at this moment. Your stop is shorter, so your 2x comes quicker for you. So this trade taken here, this trade taken here with a stop somewhere here. So if you watch this number somewhere, oh, right there is your 2x. Right? So at least you have 50% off by taking the trade there. By taking your trade, when you break this green, your stop remains the same because this is your area of value. So your 2 times move comes this day here. Right? It doesn't. That move doesn't come until a few days later.
Yeah.
Right. So this is why I want you to take the trade sooner. We said downward bias, area of value, railroad track, engulfing, hammer, whether inverted or not, depending on which side, or flag, you take a trade. Right? You don't need something else. Like you added something else. To me, this green bar is that extra thing you added, so that you would not take the trade sooner.
Yeah, I just when I looked at it, it seemed like a pretty strong move to the upside. So I'm like, maybe it uses that gap as support and continues the upward trend until it gets to that 8.2. So that's why I was just kind of wanted some confirmation on what's going to happen at the end of that gap. But yeah, I guess looking back at it now, especially with paper trading, might as well take those risks and kind of learn from those instead of waiting.
Yeah, don't second guess yourself. One. Number two, it's better to be wrong quicker.
Yeah.
If this gap is not the continuation to the downside, and if it reverses on you, you have a much smaller stop. Right? So it's okay. It's okay to be wrong. When you're right, I want you to be right sooner. Right? The only way you'll be right sooner is not to keep waiting for additional confirmation when we have all of our analysis the chart is telling us which way it wants to go, and we pull the trigger. Right? So,
Yeah.
I mean, again, there's nothing wrong with what you have done. Right? That's not what I'm saying. But I would have preferred you just take the trade sooner.
Okay.
Yeah. So when you get this inverted hammer, you put an alert right below it. The next bar doesn't happen. But it's another inverted hammer a little bit higher. So you move your alert a few cents up, and then the next bar that alert triggers.
Yeah.
That alert triggers, you go to your brokerage account, you take the trade. You don't even need to look at the chart, really. If you've looked at it the previous hour and you get that alert, you just go say, I'm gonna take the trade. Because you're doing paper trading on this chart, you're gonna take a look at the chart anyway. But technically you don't need to look at the chart, because you've already said, I'm going to enter at X dollar, my stop is X dollar or Y dollar, and my take profit is X minus Y times 2. Right? And so next day, you wake up, before you're done with your shower, you've already taken your profit.
Yeah.
Right? So that's why I want you to take it sooner. But your analysis is great.
Okay.
Because we're in a downward bias.
Sounds good.
Okay. This gap is closed, so we don't have to worry about it. If we look at the daily, so if you look at the daily, right, it's been down, 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 but then here we're making higher lows. We're continuously making higher lows. We haven't made significant higher highs, but from the lows in October, we're making higher highs and higher lows. We still have the August high to fight with, right? We still have this supply zone to fight with. So are we done with this downtrend? Not yet, until we clear this area. So what position do we want to take in the SPYs, right? So we know already, downward bias, short-term uptrend. And here's the funny part, is this retracement of the recent move up. We've gone below the 78.6. However, we didn't close below it. So it's still, this short term is still intact as far as uptrend is concerned. Right? Until it proves us wrong, until we close this, we don't have any new anchors to draw from. So we continue in that move. But again, lower high, lower high, lower high. Low, lower, low, lower, low, lower. Until we break above these highs, we're still in the downward momentum. So as far as this week coming up, what are we looking to trade? What am I going to look to trade? Again, I'm still biased to the downside. Right? What I'm going to look for is, I'm going to look for this area as an area of value, this area as a demand zone. That's what I'm going to look at. So there's two things I'm going to look at. If I break above this line here, because it's high, higher low, higher high, higher low, another higher high, if I break above this, I'm going to take a trade to the upside. But I'm going to be very conservative, and I'm not going to go for a full 2x target. I'm just going to go for a target somewhere here. But we can know. So if this is my entry, and my stop is slightly here, so if I'm looking at this number, my exit is somewhere here. It's not even a 1-to-1, right? But I'm okay sometimes to take these trades. When it's like this, I'm gonna make my position size a little bit smaller, but I'm okay to take this trade. I want to give this some room to breathe, take it. But on the flip side, uh, if price now gives me a good hammer, inverted hammer, railroad tracks to go to the downside, I'm going to target the demand zone. And the third possibility is if I get this, right? Again, if price comes down here and I get this, right? Man, this is what we missed last week. So if SPY comes down here between now and next Tuesday, this is what you should think about. One trade is to the upside, another trade is in this area to the downside, targeting the demand zone, and the third trade is at this demand zone if we get a reversal signal like railroad tracks, engulfing, hammer, pin bar. If we get one of those, here we take it to the upside again. Because the markets are very bipolar right now. Like it's not clean one direction. One news up, another news down. Right? Every day it's something happening. So we just take advantage of those small movements. And in this one, from your entry, tight stop, right? Tight stop because you're taking it as close to the zone as possible. But then here at this area, I'm going to target somewhere near these highs, not even quite that high. Sorry, you see that 0.88 to 1 ratio that I have taken earlier? And I make up with this one 3 to 1 ratio. Because I'm not going to go all the way up here. I'm still downward bias, so I'm going to go lower highs. Somewhere here, I have different alerts, and you make up for that. So we have 3 positions now in SPYs to look at between now and the next time we meet. I really would like you to start setting up these alerts at night and then taking those trades when they happen. Right? And similarly in Qs, it's the exact same setup, right, in Qs, because the charts look exactly the same. So once you do one chart, the other chart is the same. You have your demand zone here, and so if price comes down here, you take that trade. If price breaks above here, you take the trade. Now this one is one I might not take. I'll tell you why. My stop is here. My take profit is here. Like this is no brainer for me to skip, because there's just not enough distance for the next area where I will have trouble. Lower high, lower high. So if I target lower high, even if I target it all the way there, it's still at a 0.5 to 1. Right? So this one I'm not going to take. But I put an alert because it gives me a signal. Hey, something could happen here. Let's pay attention, because what could potentially happen is once we break out of here, it might use it as support and start to make higher highs, right? If we start to break this and it becomes support, we continue to make higher highs, then I want to pay attention to it. But as a trade, I'm not going to take that trade in the Qs. I will take a trade if I get a hammer here. I'll take a trade to the downside, targeting this zone. When I get here, I'll take a trade targeting somewhere here. That target again is nice because if I'm targeting somewhere here and my stop is right below this zone, 5 to 1, right? You make up for those missed opportunities, and about 1-to-1 risk reward ratio trades. So the setup is there for us. Any questions? No questions? We're good?
Can we go back to SPY real quick?
Sure.
So the demand zone you're really thinking about is the demand zone from the 13th, that big wick. Okay. Yeah. Okay. Yeah, that makes sense. I also had what do you think about the demand zone kind of after that big wick, that consolidation zone right there? Would you consider
this one
that?
here?
Yeah. So would you wait until, I guess, if you're taking the trade to the downside first, would you kind of be cautious around that demand zone first, or would you just say, hey, I'm going to target the larger demand zone
No,
on the
it's a
13th?
beautiful question actually. So every time I take a trade, I'm gonna have either on the chart as an alert or mentally some areas where price could stall.
Mm.
Now, here's why I feel a little bit comfortable ignoring this one, but again, you have to do a lot of thinking about this. Is we have a demand zone. We just took a small breather. We didn't come back down to this demand zone yet. So and we haven't moved enough away from this zone. If we come back down, I don't think it's gonna hold. I think they're gonna go after the one they left at the bottom. But it's good to be cautious. I mean, it's a very, very good question. It's good to be cautious and say, could price reverse here? And even when I take a trade and price does this, when price does this, comes down to that area and it goes sideways, I'm exiting. Like, I'm too impatient to wait for it because it could quickly reverse. Right? And we're not watching it the whole day. We're watching it for a couple of minutes. So within that 1 hour that I've looked at it at 7:30, and between 7:30 and 8:30, a lot of things could happen. And since I'm not monitoring it, if it goes sideways, I'm exiting. Even if I come back and I see that, oh, I should have stayed, I'm okay that I missed that opportunity because I've taken profit, right? It's my money now, nobody else's. So it's okay if you take early exits, provided those exits are not based on fear, they're not based on greed, they're based on technical analysis. Things that tell you price could stall here and I see it stall, I'm gonna exit. At the very least, you really tighten your stop. By tighten your stop, I mean if this was your entry, not do this. If let's say you have an entry here, you have a stop here, and your exit, let's say your exit is down here, right? If this is your exit and price moves down and stalls at this area, what you're doing is this is not a good example, but if price stalls in this area, you're going to really tighten the stop, right? If it keeps going in your favor, fine. If it doesn't, you get stopped out at a profit, still at a decent enough profit. But if it keeps going in your favor, you're good to go because you've really tightened that stop. And because you're not watching it the full hour, right? So I want you to make that stop really, really tight. Right? Not cents, like 5-10 cents tight, but but it should be really, really tight. Like you should look at what is my hourly range and consider all of those things and then make it tight. And if it just keeps going to the downside, great. If not, you're out at a profit. Make sense?
Yeah. Nice.
So I'm gonna see at least one trade from each of you by next week.
I hope so. That's the plan.
Yeah.
The setup is there, right? And it's
Yeah.
I've tried to make it as easy for you as possible. Now, your homework is really going back and understanding why I gave you this setup, right? That's really your homework. Like everything that we've studied to this date, does this setup make sense in relation to what we've learned? If it doesn't, that's where you should write it down, and next time we meet and say, hey, this doesn't jive with what we've been learning. Why? Right? So let's ask those questions.
Mm.
Yeah.
Okay.
Okay.
Okay. Sounds like a
Questions?
good plan.
We're good?
I think so.
Yeah.
All right. Then we can stop the recording.